And welcome back. You're watching Market Cafe on ET Now. Now, IndusInd Bank will be in focus as it reports its first quarter earnings today. The stock has rallied over the past 1 month, but is still down over 15% over a year. My colleague Harsh tells us what to expect. Good morning, Harsh. Take it away.
Well, yes, the net interest income number for IndusInd Bank is expected to come in 15% higher when I'm looking at it year on year. Healthy, almost 3%. Quarter-on-quarter sequential uptake, breach that 4,000 crore mark is where we're expecting to see it. But the other income and the treasury drag is expected to put a lid on the operating profit. That's expected to come in absolutely flat when I'm looking at it year on year. In fact, almost 7% down when I'm looking at it sequentially. It's expected to come in around that 3,150 crore mark. Provisions are expected to come in lower as well. In fact, 40% lower when I'm looking at it year on year, 25+% lower when I'm looking at it sequentially. Around that 1100 crore mark is where we're expecting that number, and PAT is expected to reflect that lower provisions number, expected to come in around 1470 crore, which is a solid 44% growth on a year-on-year basis, almost a 5% uptick sequentially. In terms of operational update, the numbers already disclosed show that the advances have grown around 4.5% when I'm looking at it quarter on quarter, almost 18.5% year on year. They're around that 2,50,000 crore mark, so definitely a positive there. In terms of deposits, they've breached that 3 lakh crore mark. That's a good solid 3% uptick when I'm looking at it sequentially. In fact, CASA growth has also been good, almost 4.2% growth in CASA on a sequential basis, 16.2% when I'm looking at it year on year. The gross and net NPAs are expected to trend slightly lower. In fact, gross NPAs are expected to trend around 7 bips lower. Net NPAs broadly flat, but still a couple of bips lower. So largely a good set of numbers expected from IndusInd Bank. Of course, keep your eye out on the interest margin numbers, which of course will continue to expand as rates continue to go up. MFI slippages and the restructuring book will also be two key points where investors will have their eye on, and of course how the key segments are growing. IndusInd Bank has guided for an 18 to 20% growth, so how key segments are performing is going to be the focus of what investors will see in terms of this quarterly results.
Okay, Harsh, thank you so much for that, and surely we'll be watching out for IndusInd Bank's numbers. But let's move on. Vedanta announced its second interim dividend at the board meet on Tuesday. Ashesha is here to give us details on that. Good morning, Ashesha. What's the update coming in on this one now?
Oh yes, so the board of directors yesterday in the meeting announced a second interim dividend of 19.5 rupees per share, which at the current market price translates to a dividend of yield of around 8.2%. Remember, the record date for the same has been fixed as the 27th of July. An outflow on account of this 19.5 rupees dividend that the company has announced stands at around 7,250 crore rupees for the company. Remember, this was the second interim dividend. First interim dividend stood at around 31.5 rupees per share. So the total dividend which has been declared in this year stands at 51 rupees, and the dividend yield for the year translates to 16.13%. Remember, for FY22, total dividend declared by the company was 45 rupees per share, which translated to a total dividend yield of 14.5%. Vedanta Resources, which is the parent company of Vedanta Limited, has debt maturities to the tune of $1 billion. However, now going forward, they do not have any more maturities, and hence analysts believe that perhaps company will not declare such huge dividends for the remainder part of the year. Remember, it was in October 2020 that Vedanta's delisting failed, and remember, the delisting price stood at around 87.5 rupees per share, and since then, company has declared a total dividend of 105 rupees per share. Delisting offer, as I mentioned, was at 87.5 rupees per share, and the stock has also gained quite a bit since then. In fact, the stock is up 145% since October 2020. Talking about the recent stock action over the last 5 days, it is gaining over 3.5%. Although year to date it is down almost 39%, and it is off 45% from its 52-week high. But the stock will be in focus. 19.5 rupees is the second interim dividend that the company has announced.
Right. Stay with us, Asesha. and give us a perspective on the stocks to watch out for today before we go into trade this Thursday morning.
So yes, Rallis India will be the first one in focus. It reported its numbers yesterday post market hours. Revenue from operations is coming at 863 crore rupees versus 740 crores that the company had reported same time last year. However, there is some impact on the bottom line. Profit after taxes declined to 67 crores versus 82 crores same time last year, and EBITDA margins have also seen a contraction of around 360 basis points as they've come in at 12.9% versus 16.5% same time last year. Grasim will also be in focus in today's trading session. They are planning B2B e-commerce platform for trading and marketing of building materials. This will entail an investment of around 2,000 crore rupees for the company over the next 5 years. The platform will primarily focus on MSMEs in the building material segment with the potential to further extend into other relevant categories. We also have ICICI Lombard, which reported its numbers yesterday, and GDPI has come in at 5,370 crore rupees, up 28% on a YOY basis. Gross written premium for this quarter stood at around 5,530 crore rupees, up 30% on a YOY basis, and profit after tax was up 134% on a YOY basis. Solvency ratio as on the 31st of June stood at 2.61%. We have CARE ratings, which will be in focus. Board will be considering buyback in the board of directors meeting that is scheduled to happen today. We have Techno Electric. The buyback issue opens today. Remember, it is through open market offer, and the maximum price at which the company will buy back through open market route stands at around 325 rupees per share. Lastly, LIC, ICRA and Siemens will also be in focus. LIC's shareholding in ICRA has decreased from 5.8% to 3.43%, and LIC's shareholding in Siemens is also reduced. It is reduced from 7.2% to 5.17%. So keep an eye out on these stocks as well.
Okay, Ashesha, thank you so much for all the stocks that we should be keeping on our radar today at 9:15 a.m. But we also have Vamakshi with us to give us what the brokerages are saying this morning. Very good morning, Vamakshi, and what's the update coming in from the brokerages this morning?
Well, good morning, Winnie. First, let's start off with Ambuja Cements. Now, a report has come on Ambuja Cements from Citi after the company disclosed its second quarter calendar year 2022 result, and they've in fact downgraded the stock to a sell. The second quarter EBITDA fell by around 29% year on year due to higher costs, which were more than offset higher volumes. Ambuja has outperformed peers, and at an EV per ton of around $150, it trades close to Ultratech Cement. Adani has announced the acquisition price for Ambuja, and Citi has no longer ascribed a takeout premium of 15.5 times September 23 EBITDA. And lastly, we'll focus on ICICI Lombard. Now, Credit Suisse has maintained an outperform rating on the stock with a target price of 1,430. Growth execution remains on track. They are seeing an uptick in profitability, and they expect it to continue. The earnings outlook remains healthy despite a strong FY23 base, and they're expecting an EPS CAGR of around 23% from FY23 to FY25. And considering all these factors, Credit Suisse has maintained its outperform rating on ICICI Lombard.
Right, very, very thanks, Vamakshi. But with that, we're completely out of time on today's edition of Market Cafe with me, Aziraj. Vinny, thank you so much for watching from the team that put up the show. But don't go anywhere. The market takes the action forward. See you tomorrow.